Welcome back to the Deep Dive. Today we're going to be looking at some ways small businesses can maximize their tax deductions. We'll be working from an article, Are You Missing These 5 Small Business Tax Deductions? Written by Don P. Baker of the Don P. Baker Financial Group. You know, I think this is a topic that's relevant to so many of our listeners, and there's some really interesting stuff in here. Like, did you know you might be able to write off the entire cost of a new roof? For your business. I mean,
Really?
yeah. Or that there's a special tax credit if you pay your employees to take family or medical leave. So we're going to break down all these deductions and a few more, and even touch on how the way you structure your business could impact your tax bill.
Yeah, I think that's one of those things a lot of people don't think about, right? Like how your business is structured
Exactly.
can really affect how much you're paying in taxes.
Absolutely. So this article, it kicks off by highlighting 5 key deductions. The first one that caught my eye was depreciation of assets. It mentions a deduction ceiling of $1 million.
Yeah, it's a pretty big number.
It is.
$1 million.
It's huge.
That's a lot of money you can deduct.
Yeah, so break that down for me. What does that actually mean for, let's say, a small business owner listening right now?
Well, think about it. If you've got a business and you need to, upgrade your facilities or your equipment, maybe you need some new machinery, this deduction should make it way easier to afford that.
So it's not just about saving money, it's about actually being able to make those investments and improve.
Yeah, exactly. One thing, though, this deduction, it's starting to phase out.
Oh, really?
Yeah, so if you've been thinking about making any big changes to your business, now might be the time to do it.
So it's almost like a limited time offer. All right, what about the next deduction on the list?
Okay, so next up is the accounting method. And the article points out that if your business has average annual gross receipts under $25 million, you can use what's called the cash method of accounting.
Okay, I need you to break that down for me a little. How would using the cash accounting method affect a small business owner's day-to-day?
Well, let's say you're a small business owner and you send out invoices to your clients, but sometimes they take a while to pay you.
Yeah, that's pretty common.
It happens, right? So with this method, you only pay taxes on the money you actually have in hand, not on those invoices that haven't been paid yet.
Oh, so it's more about when you actually get the money.
Yeah, it aligns your tax liability with your actual income.
Which I imagine could be a huge help for managing cash flow.
Absolutely, especially when you're just starting out.
Makes a lot of sense. Okay, so moving on, the third deduction is meals and entertainment, which I understand has had some pretty significant changes recently.
It has, yeah. The biggest change is that deductions for entertainment expenses are pretty much gone now.
Oh, wow. Okay.
Yeah, but you can still deduct half of what you spend on meals with clients.
Okay, so 50%.
50%, but there are some rules, of course.
There are always rules.
Always rules. The meal has to be directly related to your business. Can't be some lavish, extravagant thing.
So basically, keep your receipts organized and make sure those client lunches are legitimate business discussions.
Exactly. Okay, moving on to something a little more heart-warming. The next deduction is the employer credit for paid family or medical leave.
Oh, this one sounds interesting.
Yeah, this one's a good one. You can actually get a tax credit for some of the wages you pay to employees who are on family or medical leave.
Oh, wow. So this encourages businesses to actually offer paid leave,
Exactly.
which helps employees during major life events.
It's a win-win.
So are there any specific requirements to qualify for this?
There are, yeah. It depends on the kind of leave, how much the employee makes, how long they're taking leave for, but it's definitely worth looking into, especially since the Consolidated Appropriations Act extended this credit through 2025.
Oh, nice. So it's going to be around for a while. Gives businesses a little bit more time to think about it.
Absolutely. All right, last but not least, we've got the deduction for commuting costs.
Wait, you can deduct commuting costs. I thought that was a thing of the past.
Well, for the most part it is, but there's one interesting exception. You can deduct reimbursements for employees who commute by bicycle.
So if I encourage my employees to bike to work and I cover some of their expenses, I can deduct those costs.
You got it.
That's amazing. I had no idea.
It's a great way to be environmentally friendly, encourage a healthy lifestyle for your employees.
And save on taxes.
And save on taxes, exactly.
See, this is why I love these deep dives. There's always something new to learn. So those are 5 key deductions that every small business owner should know about. But the article goes on to say that we should also be reviewing how our business is structured, especially after recent tax reforms.
Yeah, absolutely. It's something a lot of people overlook, but the way your business is set up can have a huge impact on your taxes.
So let's talk about that. The article mentions S-Corp, partnerships or sole proprietorship LLCs, and C-Corp. Let's start with S-Corp. What are the main tax advantages there?
Well, one of the biggest benefits is that you might not have to pay separate business taxes on top of your personal income taxes.
Oh, okay, so you're not being double taxed, essentially.
Exactly. And this can be a huge advantage if you're in a high income bracket.
Makes sense. What about partnerships and sole proprietorship LLCs? How do those work?
Those are often called pass-through entities. Basically, the business income gets passed through the owners and is taxed at their individual rates. And just like with S corp, they might also qualify for a 20% deduction on their business income.
So they have some similar benefits to S corp.
They do, yeah. But there are some differences in how they're set up and managed. For example, S corp have stricter rules about who can be an owner.
So it really depends on your specific situation.
Exactly. That's why it's always a good idea to talk to a tax advisor. They can help you figure out the best structure for your business.
Okay, and finally, what about C corp? Do those have any tax advantages?
They do. Even though they don't get that 20% deduction we talked about, C corp benefit from a flat corporate tax rate and potentially other tax cuts.
So there are still some mandates there, even though they're structured differently. It sounds like there's no one-size-fits-all answer when it comes to choosing a business structure.
Nope, definitely not. It all depends on your individual business needs and goals.
Wow, this is a lot to digest. We've covered so much ground already, from those 5 key deductions to the importance of business structure. Before we move on, is there anything else you think our listeners should keep in mind?
Yeah, there's one big thing Don Baker stresses in his article. Tax laws are always changing.
Yeah, that's true.
So what worked last year might not work this year. You really got to stay up to date.
So how do you even do that? Should I be, like, subscribing to tax law newsletters?
Well, the IRS website is a great resource. They've got all the latest information on tax laws, forms, you name it. You can even sign up for email alerts for specific topics you're interested in.
So it's like having a direct line to the IRS.
Pretty much. And of course, talking to a tax professional is always a good idea, especially if you've got any complicated questions or you need some personalized advice. They can help you navigate all these changes and make sure you're not missing out on anything.
Well, this has been incredibly helpful. Thanks for breaking it all down for us.
You're welcome. Always happy to help.
All right, so we've explored 5 key deductions, we talked about the importance of business structure, and we've emphasized the need to stay up to date on all those tax law changes. I feel like my brain is full. What are your main takeaways from all this?
You know, the big thing for me is that knowledge is power when it comes to taxes. The more you understand about deductions and how your business structure affects to taxes, the better decisions you can make for your business.
Absolutely. It's not just about minimizing how much you're paying taxes. It's about using those savings to invest back into your business and build a stronger future.
Exactly. And don't be afraid to ask for help from the experts.
Totally agree. Now, before we jump into the next segment, where we'll talk about some actionable steps for our listeners, I want to leave you with a question. Knowing what you know now about these deductions, what's one thing you could change in your business today to maybe lower your tax burden?
That's a good question. Really makes you think, doesn't it?
It does. Take a minute to think about what we've talked about and see if any of these deductions or strategies could work for you. We'll be right back after a quick break to discuss some specific actions you can take.
Sounds good.
All right, so we're back and ready to talk about some specific actions you can take after listening to this deep dive.
Yeah, let's get practical.
So where do we even start? What's the first thing listeners should do?
Well, I would start by grabbing your financial records from the past year and taking a good look at the deductions you're already claiming.
Okay.
Are you getting everything you're eligible for? Did you miss anything?
Yeah, good point. I know I've definitely missed some things in the past.
Yeah, it happens. And if you're not sure about something or if it seems too complicated, don't be afraid to call in a professional. A tax advisor can help you spot any missed opportunities and make sure you're doing everything right.
Like having an expert in your corner.
Exactly. Now, remember those time-sensitive deductions we talked about, the 100% depreciation and that bicycle commuting reimbursement?
Yeah.
Those are going to be around forever. If you're thinking about taking advantage, now's the time to act.
Don't miss out. Okay, so what if I'm, say, a freelancer who's been working as a sole proprietor?
Okay.
When should I start thinking about switching to an S corp or something else?
Well, one thing to look at is your income level. If you're consistently making good money, an S corp might be a better option tax-wise.
So as my business grows, I should be thinking about whether my structure still makes sense.
Exactly. And remember those pass-through entities like partnerships and sole proprietorship LLCs?
Yeah.
Those can also be good options for lowering your tax burden depending on your situation.
So many options.
Yeah, it's about finding the right fit for your business.
Right, like choosing the right tool for the job.
Exactly. And like with any big decision, it's always good to get some expert advice. A tax advisor can help you weigh the pros and cons of each structure and figure out what's best for you.
So they can help you navigate all the ins and outs of the tax code.
Exactly. Okay, now on top of reviewing your deductions and your business structure, you've also got to stay informed about changes to tax laws.
Yeah, that part always stresses me out. There's just so much to keep track of.
Yeah, it can be a lot. Subscribing to a tax newsletter or a good industry publication can help. And remember the IRS website we talked about.
Mm-hmm.
That's your go-to source for up-to-date information.
Like your personal tax library.
Exactly. Okay, so let's talk about some other things you can do.
Okay, fire away.
First up, tax credits. Don't leave those on the table. We talked about the credit for paid family and medical leave, but there are others out there for things like hiring veterans or making energy-efficient upgrades.
So basically, explore every avenue for potential savings.
Exactly. And don't forget about good record keeping. Keeping track of your income, your expenses, and all those deductions is going to make tax time so much easier. It can also protect you if you ever get audited.
Oh, don't even remind me about audits.
Yeah, nobody likes those. But being organized can really save you a lot of headaches down the road.
I've definitely learned that the hard way.
Haven't we all? Okay, another helpful tip is to make estimated tax payments throughout the year. That way, you're not hit with a huge bill in April, and you can avoid any penalties for underpayment.
That's a good point. It's easy to forget about taxes until it's too late.
Yeah, it's one of those things we tend to put off, but staying on top of it can really make a difference. Okay, last but not least, I want you to try and think about taxes a little differently.
Oh, okay, how so?
Instead of seeing them as a turd-in, think of them as an opportunity.
Okay, I'm listening.
When you understand the tax code and you're taking advantage of all the benefits available to you, you're basically working with the government to support your business.
Like a financial collaboration?
Exactly. By managing your taxes strategically, you can free up more money to invest back into your business, your employees, your future.
Wow. I like that way of looking at it. It's about more than just minimizing what you owe.
Right. It's about using your tax strategy to help your business thrive in the long run.
I think we've covered a lot of ground here. We've talked about specific actions like reviewing deductions, reassessing your business structure, staying informed, and exploring tax credits.
We also touched on the importance of record keeping, estimated tax payments, and having a positive outlook on taxes.
This has been so helpful. I feel much more prepared to tackle my business taxes now.
That's great to hear. Just remember, knowledge is power, and with the right information and a proactive approach, you can handle anything the tax world throws at you.
Now, before we wrap things up, I want to leave our listeners with one final thought. As we wrap up our deep dive into small business tax deductions, I want to bring it back to you. What's one thing that really stuck with you from our conversation today?
Honestly, just the reminder that tax laws are always changing. It's easy to just coast along, but staying informed can really make a difference. Like you said, that 100% depreciation allowance and the bike commuting thing, they won't be around forever.
It's true. Got to stay on top of it. I'm definitely going to be taking a closer look at my business structure and all those tax credits we talked about. What about you?
Yeah, for sure. And I think it's worth repeating that getting advice from a professional can be a game changer. They can help you find savings you might not have even known about. Plus, it just takes some of the stress off.
Totally. So as we wrap up, what's the one piece of advice you would give to our listeners?
Be curious and proactive and informed. The more you know about taxes, the better equipped you'll be to make good decisions for your business. And remember, taxes don't have to be a burden. You can actually use them strategically to help your business grow.
That's a great point. So to all our listeners out there, keep learning, keep exploring, and keep pushing your businesses forward. Thanks for joining us on this dip dive into small business tax deductions. We hope you learned something new and feel empowered to take control of your taxes.
It's been fun.
We'll be back soon with another deep dive into a fascinating topic. Until then, stay curious.